Hello everyone, this is Kanika Bali, and in my video I'll be explaining you the major provisions with relation to crypto assets introduced in budget 2022. At the onset I would like to clarify to you that the focus of this video would be on taxation of crypto assets. I'm specifically using the word crypto asset because crypto asset and cryptocurrency doesn't mean the same thing. Okay, and crypto assets are not a legal tender in most of the countries of the world. They are legal tender only in one country, which is El Salvador, and in that country Bitcoin is accepted as a legal tender. Okay, so we will talk about taxability of crypto assets and not cryptocurrency. Okay, as the crypto asset is not a legal tender. Budget 2022 holds a lot of promise for the Indian crypto market because the government has defined the definition of virtual digital asset through the budget 2022 provisions. Now, what is a virtual digital asset? Virtual digital asset means any information, code, number or token which is generated through cryptographic means or otherwise, and which is stored, generated and transferred digitally. Now, virtual digital assets also includes non-fungible tokens. What are non-fungible tokens? This is a relatively new and a very popular word in the crypto arena in recent times. For your understanding, I will tell you that non-fungible tokens are a token which are very unique and can't be interchanged with any other token, and they are generated and transferred digitally. I'll be making a separate video where I will be explaining in detail non-fungible tokens and how they are generated and the various examples relating to it. For the timing, non-fungible tokens are also included in the definition of virtual digital asset. Also, the technology is changing at a very quick pace. So, the government has also mentioned in the definition that any other asset which the government considers to be of the nature of crypto asset or virtual digital asset, that will also be included in the definition of virtual digital asset and also would be taxable. Now the definition is clear. What taxes do we have to pay on virtual digital asset? You know, whenever we sell an asset, either we get a gain or we get a loss. So the gains on sale or transfer of crypto assets would be taxable at the rate of 30%. I will explain you this with the help of an example. For instance, Mr. X buys Ripple worth 1,50,000 rupees, and after 6 months he sells it for 2 lakh rupees. He has made a gain of 50,000 on the sale of the crypto asset called Ripple. On that 50,000 he has to pay 30% tax, which will total to 15,000 rupees. That is a pretty steep rate. Now what happens to the losses? It is very normal then that when you can sell an asset for a gain, you can also incur losses when you sell that asset. So the government is very clear that crypto losses cannot be set off against any other head of income. Like if you incur a loss on the sale of a crypto asset, you can't set it off against any other taxable income of yours. Plus you cannot carry forward that loss to future years to be settled against crypto gains of the future years. So that loss totally belongs to you, and it is that loss doesn't gives you any tax benefit. So watch out for these provisions. Now comes the case of gifts. The government has also mentioned that if you receive any virtual digital asset as a gift, then it would be taxable in the hands of the recipient. As crypto assets are a buzzword in today's time, it's very common that any friend or relative of yours says that I'll be gifting you Ethereum on your birthday, and you can save it in your wallet and sell it whenever it gets you good value. So will that Ethereum transfer will be taxable in your wallet or in that year of receipt? Yes, even crypto assets received as a gift would be taxable. A final provision is about TDS. We know that whenever we receive any income, that income is usually subject to TDS. TDS is tax deducted at source. When we sell a property, TDS is deducted by the purchaser. When we receive salary, TDS is deducted by the employer. when we receive rent, TDS is deducted by the tenant. Okay, so TDS is applicable in most of the revenue or capital receipts. Now a TDS provision is also attached to crypto assets or virtual digital assets. Whenever you sell or transfer a virtual digital asset, the crypto platform or the exchange will transfer the relevant sale proceeds to your bank account. So before transferring the sale proceeds to your bank account, they will deduct 1% as TDS from the sale proceeds and remit the balance 99% to your account. This TDS can be claimed by you when you file your annual income tax return. So the TDS provisions have also been brought under the crypto assets regime. These are the major changes introduced by the budget 22 for the crypto industry. So watch out for these rules, and keep watching our channel for further updates on the crypto industry.